Good afternoon. My name is Martin Petrov. I'm part of the cryptoboost project. Very briefly on myself, I come from corporate and investment banking background for the last 25 years. I've been managing the investment banking units of some of the largest banks in the region. Lastly, I was advisor to the board of Alpha Bank in Bulgaria, which we successfully sold in a structured transaction to Eurobank. Some of the larger transactions where I have taken part and structured which we deem relevant to this transaction are large M&As in the telecoms sector, MTEL, BTC, both transactions over 600 million euro. Also part of structured transactions in the energy sector, several commercial banks, non-banking institutions in the last year as advisor. For the last 2 years, I've moved out of the banking sector. Currently, I'm Chief Executive Officer of one of the largest investment intermediaries in Bulgaria. I'm Chief Compliance Officer of a non-bank lender working under the Juncker program. I'm a member of the board of 2 funds, and I am also a named partner in an M&A advisory boutique. For the last year and a half, I've been part of the EFAC advisory group to the European Union. On the cryptoboost project itself, very briefly, our concept has been to set up a specialized investment vehicle in the Netherlands, which we are going to use in order to bid to acquire either one or both targets in the banking sector, which are small boutique banks. One of them is in Bulgaria, the other is in Romania. We've been tracking over 30 targets across Europe, which would be suitable for boutique acquisitions, and we have shortlisted these specific 2 targets for a number of reasons. The first key reason is that both are in a relatively good financial state. We've done or had access to AQRs of both banks, and also we have carried out financial due diligence of both, which of course is going to be repeated when we are making the bid for the targets themselves in order to have access to information that is much more relevant and more recent. But what we want to impress definitely on investors is that we have a very good understanding and knowledge of both targets. Also, we've had discussions with the central banks as part of the acquisition bids for both banks by other players who have ultimately failed to acquire them because they did not want to structure the acquisition through investment vehicles. This also gives rise to one of the first questions that we have come across, which is why we want to structure the transaction in exactly the way that we are going. Why don't we set up some type of crypto company and try to acquire a banking license for it? Why don't we go with a direct bid as a number of investors for the target itself? The simple answer to that is that the regulators in both Bulgaria and Romania would like to see a financial institution, preferably a bank, acquiring both targets. The reality there is that for sure they are too small to be of interest to banking players from Europe. In both cases, bids from banks outside of Europe, specifically 2 Asian banks, have been rejected as non-eligible. In both cases, bids from local players who have no expertise in the financial sector have also been rejected. A relevant case is an attempt by several smaller players in the lending industry, in the investment intermediary industry, to acquire banking licenses. In all cases, they have been rejected since the idea is that already the two countries have enough commercial banks which have been granted licenses, and any potential new player who could apply and get a banking license should be already working as a bank in the European Union. So as you understand, barriers to entry are exceptionally high, and they are going to stay high. The successful acquisitions that we have seen for majority stakes in banks in the European Union have always been structured in the form that we are trying to go for this case as well. You go for a very strong management team with very substantial background in the banking industry, and you go as a management buy-in backed by investors, preferably institutional investors. In any case, it needs to be exceptionally transparent form of raising the equity for the transaction itself. As you understand, in Europe we are very sensitive to anti-money laundering measures and to anti-terrorism financing measures. So we need to be very transparent from who we are raising money for this, which is the reason that we are going for a private placement, where we are going to investigate and have very substantial background on all of the investors that we attract, and we are going also to use a platform that has substantial expertise in doing such background studies. The second very key question that comes to mind is why I have personally decided to go to this project. The answer to that is that I firmly believe that the financial sector, and specifically banking, is going to continue to play a key role in the economy in the next 20 to 30 years. It is very hard to replace fully banking players by alternative channels. At the same time, I am very firmly convinced that modern technology must and will play a key role in the development of banking. So if the revolution cannot happen from the outside in this sector because of high barriers to entrance, by necessity it is going to happen from the inside out. And this is the specific model that we are chasing with this transaction. Since we have discussed that there are alternatives, we want our investors to understand that the preference of our team is to go directly to a banking license, because in order to cover all of the activities which we want to cover to be successful, we need otherwise to go to a full investment intermediary license covering all of the European Union, plus a full license for a non-bank lender but regulated by the respective central banks, plus an electronic money institution license, which is very hard to get, nearly as hard to get as a new banking license, and also a payment services provider license. To integrate those four into a business group which is going to be structured as a financial holding is going to take much longer. It is going to require probably even higher commitment of equity to be successful. Of course, it is an alternative, and one answer to people who ask us, if you fail to buy the banks, do you have an alternative? Yes, this is the alternative. Going to 4 licenses and structuring an integrated group that essentially covers the majority of the banking activity, with one very substantial difference: we cannot raise funding in the form of deposits. A question which is very much related to this is, do we intend to use the bank to integrate certain other forms of raising funds, such as crowdfunding and peer-to-peer lending, because there are new European regulations coming on board which are pretty much going to restrict those two sectors. And the simple answer to that is yes, we definitely see the acquisition of a bank with the ability to integrate the functionality of peer-to-peer lending and the functionality of crowdfunding there as a road ahead, and it is part of our business model and value-added services that we are revisiting. On the question of regional risks and also the key competencies of the team in handling this, you have to understand that both Bulgaria and Romania are investment grade quality. We understand that you may have in the back of your mind the signal that these countries are not the most prosperous in Europe, but at the same time this is also a very big potential because these markets are in a growth stage. For example, Bulgaria is very much dedicated to entering the Eurozone, and even now it has the national currency pegged to Euro for over 20 years. For the last 12 years we have had the same government being re-elected during the last 3 elections. Bulgaria is very much committed and has national regulation which is exactly copying the European regulations, and this is very much also the case for Romania. So in terms of legal background, you do not have a major difference between doing an investment in Austria, in Germany, in Switzerland, or coming to this region. At the same time, return on equity is dramatically different in emerging European markets as compared to the Western European markets. Both countries, Bulgaria and Romania, have done a lot of effort in developing national infrastructure, and this means that the backbone for developing the industries in those countries is in place. As countries that are very much integrated into Europe, they also enjoy an additional benefit. Both countries are relatively open to the Asian market, the Russian market, China, and also the United States, which means that it is much easier to develop a customer model and investor model attracting money and covering customers from non-European markets compared to the traditional Western European markets. So we definitely see the potential there. As for ourselves, what is our stake in this? Do we have really skin into the business? I can answer this specifically for myself. If you check my background, and it's not so very difficult to do this in modern times, you will see that all of my returns are very much linked to my role to the European Commission and as senior staff which is licensed by the central bank in the financial sector. As you know probably, any investment that fails where I take a managerial role automatically would prevent me from keeping any executive role in the financial sector. So for me it's going to be very much a career suicide if I go into a serious investment in a senior role, simply because it means I can no longer stay in the financial sector, and in the last 25 years that is all that I really know. Also, you see that our proposal is essentially that the bulk of our returns is in the form of shares, so we really benefit only if the project is successful. And something even more significant, as banks or shareholder companies, senior staff, their executive level staff, is required to provide financial guarantees for the good management of those banks. Specifically, in this case, my collateral assets pledged are going to be my shares in the bank. So I'm not only not going to benefit if the bank is not going well, but since my shares are going to be the cover for my good management of this asset, I really stand to benefit not at all if it does not develop well as a project. Another key question that we see is how confident are we that we can deal with the regulatory issues. very simply put, in the last year, when I went through the licensing process for myself as CEO of Sofia International Securities, I have had to interact very much in detail with the local regulators, so I understand their requirements, including for putting new people in management position in financial institutions. And for a very long time as senior banking staff, I've had interactions with the local central bank, and I understand their way of thinking. Moreover, as part of EFAC, I also have the opportunity to interact with the European regulators, and I understand what is essentially acceptable to them, just being structured in a specific way, what is totally unacceptable to them, and in which direction they are going. So that is basically for me. Thank you very much for the attention, and have a nice evening, everyone.